Hello, everyone. Welcome back to the channel, Matt with Green Bar Trading. And welcome back to another weekly watch list video where I'm going to go over all the technicals, all the fundamentals, and all the research that I've done for the week ahead so that we can all be on the same page and well prepared to tackle the financial markets this coming week. So the way that I'm going to do it is I'm going to start with showing you guys the earnings for the coming week. This is Earnings Whispers. Great job they do. So I just show you guys the picture here, and every day it's something that we go over in our Discord. It's something that I post. So we know if we're trading a stock, you need to know if their earnings are coming up. When I'm trading, I do not like to hold through earnings, which if you did this past week and you got lucky, good for you. I don't recommend it. As you can see with Facebook, with PayPal, and then on the upper end with Google and Amazon, you just never know which one is going to take off and which one is going to lose a historic amount of value in one day, and that's Facebook. So you just don't know. That's why I don't recommend holding anything through earnings. And something else super important that you need to know when you're day trading is the economic calendar. When data is going to come out, when important things will be coming out, Fed speakers be speaking. All that is so important to know when you're trading. And on last Friday, we saw a huge jobs number. So what does that mean for this coming week? So this week, Monday, Tuesday, Wednesday, there's some Fed talk here on Wednesday. Nothing interesting Monday through Wednesday. But what is very interesting is what we see on Thursday. On Thursday is the Consumer Price Index. That is the inflation gauge. That is everything. So when we saw, and I think it's going to mean even more this week, because what we saw on Friday with that huge beat, the huge revisions for the previous 2 months, they added so many jobs, so many more than what was expected, wasn't even close. And I think that the inflation on Thursday is going to even mean that much more now. It's going to mean that much more. So I expect some choppy trading to continue like we've seen all through earnings season. Everything is so choppy. The VIX is up, it's down, it's crazy. The 10-year, I'll show you guys here in a second, the 10-year Treasury yield started the week at 1.75 and ripped over 1.90 to close at 1.916%, closing in on 2%. These are levels we haven't seen in a couple of years. These big moves like this, it just spooks markets, the equity market, any market. And seeing oil, oil has just gone crazy high, approaching $100 a barrel. So when you see, really big moves in anything, it's usually a very clear sign to the overall equity market that we're going to see a lot of choppy behavior. So something else here I want to share with you guys. This is something that I like to look at. You may find it interesting, you may not. I'm just here to give you guys some more information, a little education, things that I know that maybe you don't. This is the bull and bear number that comes out every single week from Investors Intelligence. And I think it's a great contrarian indicator. Contrarian meaning the bull number. Now we see here, if you can see this blue line, we see that the bull number could get up to 65. When it's low, and it's very low right now from a historical point of view, very low. That means that the money managers, the people that they ask that make up this study, are very bearish. They think there's still a lot of room down for the market. This bull number that's under 36 here, 35.7 in the last reading, that is really low. That's low for a bull number, and that shows that there's a lot of money still sitting on the sidelines. So from a contrarian point of view, I would take these numbers as very bullish. Hopefully that makes sense. The less bulls, the more money on the sidelines, the more the market can continue to go up once they, start buying again. So if a market's holding up and you're seeing this, that could add to a further move up. It could. Just something to keep in mind. There's a whole contrarian type of thinking to the stock market. So we showed you that. Let's get into the Discord if you're interested. This is a link in the description. Trade in a community. It is so much better than trading alone. And this community is outstanding. I could not be happier with, trading with these people. Amazing group of traders, very educated. And it's been a lot of fun for the past year, building this community. So if you're interested, the link will be in the description. Now, getting into the charts, getting into the technical analysis. So when you look at this, this is the SPY, this is the S&P 500, and this is the past year of trading. This is a blank chart. Before I do my technical analysis, this is what somebody would see. So if we were day trading or if we're swing trading, how do we know where the potential for the stock market to go is? Because this is something I use. I call it my compass. After I do my technicals, I can try to predict where I think the market is going to go. And we have done a very, very good job with that. So now all I do here is I've obviously already done this, setting up for the video. These are the technicals that I see. And this is the past year, like I said. This is a trend line for the past year. And it was support, broke down, and then turned into resistance right at this area here. Right here, that is multiple confluences to show why we went down. So we were hitting a resistance line for this year. You can see here 2021 ends, 2022 begins right here at this dotted line. So for the past year, for this year, 2022, we have not been able to break this downward descending trend line. So you saw the trend line for the year. We hit it and resisted pretty hard. So that is something to be aware of. Now, if we plug in here, which is something that I always look at, is where is, actually we can keep this on. Where is the 200-day moving average? Because that was key. So when we were looking at this last week, in last week's video, which was made right here where we were closing at the 200, I made it a point to say how important it would be for this week coming up, which was last week, to break the 200-day moving average. You had some resistance overhead, yes, 100%, but we broke the 200. And then on Friday, we retested the 200 moving average to the penny just about and bounced off of it very nice to close up on the day. So this is where we're at now. Looking at it from a bit of a smaller, and I'm just going to take this off here. So right here, 453 is where we came up to at 3:15 p.m. and sold off immediately. Why did we sell off here? Well, it happened to be previous resistance from the day before. So the market opens here at 9:30. It comes up to 253 and tanks for the rest of the day. So we sell off a little bit, come up to this 453 area again, and reject hard. So what am I going to be looking for Monday coming up? 453 now becomes a level that I need to see break. So if we're looking at this past year, like I said, I want to see 453 break and then this resistance line here. If that happens, then maybe we go up further, and then we're going to have to break this previous high of 458, 460 area would be the next, area where we could see resistance. But right now, to me, to be honest, it's looking like we are downtrending. Even with that bounce off the 200-day, we're still making lower highs and lower lows on the year 2022. Can that change? Of course. We can consolidate a little bit and then break out to the upside as well. But for right now, and for the stocks that I'm looking at, everything seems to be in a descending pattern. The only thing that's not in a descending pattern is the VIX. So this is the VIX on the year, which is the opposite of what the overall market's doing. So this is continuing to go up as the market goes down. This is the fear gauge. This is the VIX. This is something that will spike up when we're seeing the market crash. So this was the correction right here, came back nicely, but we're still making higher lows. I want to see this go back down to this 1465 area where we were all year last year. We're still not there yet. The market is still spooked. And to be honest, I think that, with the Fed raising rates in like 3 weeks from now, I don't think we're going to see this come back down to the 14s anytime soon. I think volatility is still going to be very much in the market. So if we look at the ES, very similar. This is the daily chart. So we're going to use our daily settings. And once again, on Friday, a bounce off of the 200. This was a nice call here of, where we were going to see a potential bounce at the 10% correction level. That happened. So that was good. That was the first bounce. A lot of times, during a correction, you're going to see this type of movement. We need to, though, see the break to the upside, because if we don't and we see further selling, we're just going to make lower lows and we're going to come back down to 15% correction, 20% correction possibly. So I want to see this 200-day hold up. We had the bounce, the first bounce off the 200. This is something very key. This 44.37 level is going to be key going into next week. Want to see this 200 hold. It was resistance. Now it's support, which is a good start. Earnings last week made the market absolutely insane to trade. Simple as that. Facebook brought the market down. PayPal brought the market down. Google brought the market up. Amazon brought the market up. That's why we were trading up on Friday. And you can see here on the Qs, that's what we saw on Friday. Very similar days here. So this is Thursday and this is Friday. We're in a trading range here from 352 to 362 on the Qs. A lot of range here for 2 days, 10 points. So, you can see there's obvious volatility, but, something that I hated to see, and this is because of Facebook, we were setting up with this nice bullish hammer candle on the daily, on the Qs. We broke the 200-day moving average. This was looking great. And then Facebook comes out and spoils the party. And this is where we're trading now. We're back under the 200. I can't be bullish yet until we stay over the 200. And then we're going to have to test the 50-day. And there's a lot of overhead resistance, a lot of overhead supply up here. So, that's the Qs. That's the SPY. We'll take a look at the Dow. This to me is looking way better than the other indexes. And we bounced directly off the 10%, which we called last week. Now we're in an uptrend here. We're still, unfortunately, in this for the year, downtrending, but this is looking a lot better to me than the other indexes that are, like the Qs under the 200. We closed over the 200 here. We bounced off of this trend line. We're getting very, very tight here. Which way is the market going to go? Are we going to go up from here or down from here? Well, we're going to find out pretty quickly. So that's the Dow Jones Industrial. Let's see, what else could we look at here? I don't have much as far as what I'm watching for the week, but I will show you Apple's chart, because what I see here on the daily is an inverse head and shoulders. So what that means is this would be the head. Usually it would be up here and then we would expect down. This to me looks like an inverse. You got a shoulder here, the head, and now you're building out a possible other shoulder for maybe a move back up to test, the all-time highs up here, which, you're kind of setting up a double top. We'll see if we do that. We're going to need the overall market to also be pretty bullish. Now, the best thing would be if this consolidated for a little bit longer and then started to go up. But that's an inverse head and shoulders setting up for a possible move up. And if this does move up, it's got like 12% of the Qs weighted, which would bring the QQQ up as well. And it would break the 200 on the Qs. And, that's how these markets all are connected. So what else do I have to look at? DraftKings actually broke out a little bit from a base that it was forming. And it's now showing higher highs and higher lows for a potential rebound. It broke a descending resistance line, broke out, retested that. This has room back up to this 27 area. So probably about the 50 moving average it's got room up to, but it also has earnings here on the 18th. Now that's not until it's not until 2 weeks from now. So you can technically, make a trade here potentially for the move up. I would not want to hold this around earnings, but this is definitely starting to make that reversal that you can see pretty clearly right here. So DraftKings, that's why that one's on my watch list. Something else that looked pretty good was the XLF, the financials. So you can go in and choose, maybe Bank of America. That had a nice bounce here off the 200. Citibank is starting to move up as well. Nothing that's going to really, make you a fortune. But AMD, this is another one that I have on my watch list. This is the daily chart as well. We're over the 200, which is good, but we're under the 50, which, is going to be resistance up here, along with the 130 area. but this is the trend line for the year here. I'm just going to make this a little bit bigger for you. Trend line broke above it, and now we're kind of, bouncing off of it a bit. So I do like AMD here for a potential retest of at least 130, 136 before it sees its next resistance area. So AMD, that's why that one's on my watch list as well. Let's see here, CrowdStrike. This started to move up as well after a lot of selling. So this is starting its uptrend. Maybe it's got room to the 50 right here. A lot of, overhead supply, ton of overhead supply here. So that's why it's going to take a little bit of time to get back up there. Facebook, this one just totally dropped and just ruined this entire chart. This chart is a disaster now because of where this one is. 237 it closed at from 327 2 days before that, 100 points. And that's what brought the whole market back down. And that's how volatile a market can be, just based on one huge FANG stock missing on earnings. So that's why I don't really recommend holding any of this type of stuff through that. So that's it. We went through the technicals on the SPY, the Dow, the Qs, to give us a better probability of where the market might go. A couple of stocks to keep on watch. One other one I could show you here is Tesla. For those of you that might trade this, I'm just going to move this one on. This one's in a clear range. Very clear range here. Exact double top from the day before. So 937 is going to be a spot that you're going to want to watch. If it breaks out of that, great. Then maybe we have room up to the 50-day moving average. Maybe we have room up to 1,000. I could definitely see something like that happening. It recovered the 200 really nicely. So Tesla, if Tesla could break out of this 937, great. 881 is the low of the previous 2 days. So it's in this range. It could really go either way at this point. But like I'm saying, on the year, you can see here, everything is just making lower highs. It's just stair stepping down. So, not very overall bullish at this point. I need to see more. And, Thursday with the consumer price index coming out, that's going to make trading some pretty choppy this week, most likely. Hope you enjoyed the video. If you did, hit the thumbs up. If you're new, subscribe, and I will see you back tomorrow with another one. Take care, everyone.